All right, I'm going to break down a trade that I took on the 17th of October on Euro USD. I'll put a screenshot up somewhere on the screen, but I'm not only just going to give you a breakdown of the entry and the lower time frame stuff. I'm also going to give you some context behind what we have been seeing recently on the Euro on our higher time frames and what gave me the confidence to really shoot this trade yesterday. So without further ado, let's jump into the video. And I want to take you back to kind of this PA that we were experiencing over here. But first, let's jump onto the weekly and really understand what we are dealing with here. So from around February, the start of this year, we saw an injection of liquidity to the upside, right? We're pushing higher, multiple legs. We get one leg here, second leg, and then this one, not as illiquid as these two here, but still relatively illiquid and liquidity seeking move. But we get to this point here and we start to get this area where liquidity is beginning to be distributed. This leg has finally found opposing liquidity enough to where a large amount of liquidity can be distributed. And that's why we're getting this sideways PA in the market. So you see that we get this leg here, this final leg higher, price taps back into this area of core volume, right? Which can be identified by the bodies there. We tap into that, and usually in this case, if we're going to get a move higher, we want to see inefficient delivery, right? The same way that we got here after this shallow pullback, inefficient delivery, right? And this inefficient delivery here, we want to see something along similar lines, or even here at the end, we got this imbalance, right? Here, we don't get anything. We just get price trading back into the range after this illiquid move down, right? We draw back up the illiquid leg, which we'll see on the daily time frame, and then we just begin transacting again. Price becomes liquid and transactable. We don't get any follow through. Now, the final telltale sign of price beginning to slow down and distribute liquidity is how we are behaving, number one, from the absolute high over here, right? This buy side liquidity level and the area of volume, right? So the bodies represent where the majority of the volume is being contained, right? So this high here kind of caps off where the majority of the volume was being traded. And you see we tap into it 4 times and fail to hold above. We get one here, get another one here, another tap here, and we fail. We're rejecting these levels and we're failing to bid price higher than this region. And that tells me that at these areas, right, above this area of buy side liquidity, buyers are not willing to bid the market higher, right? This area is too expensive and buyers are not willing to continue to buy the market. So with this information and the nature of this move here, the nature of the delivery, how liquid and transactable it was, this was telling me that now price is more or less exhausted and we're gonna have to pull back into the range, possibly, to find more buyers. And the first area that we'll most likely find more buyers is this area here. This is the first area on our chart where we can assume that price will be deemed as cheap. Right, so we can assume, okay, I don't know why I cannot get out of this. This is the first area on our chart that we can assume that this price will be deemed as cheap, right? This was once a cheap price pulled down, buyers stepped in, and now anything below that is now deemed as cheap. So we want to see buyers step back in below this region. This is where buyers will be present, and therefore we want to trade towards that region. Right, so that's some kind of context on the weekly. And just to kind of cap it all off, right, this distribution, you can see how prominent it is on the monthly, how we get just 1, 2, 3, 4 monthly candles of just consistent upside. And now we've got 3 months so far of just sideways PA. We're beginning to really distribute that liquidity off. And in terms of arrays, you see right here, we're distributing that liquidity at this monthly imbalance right here. We tap it perfectly on the proximal line and we're beginning to distribute that off. So now let's pop down to the daily and really get a bit more technical with it and start looking at a lot more price action and diving into it in a bit more detail. So we see that price puts in that area of buy side liquidity. We make this high, right? We'll punch that in. There's BSL, right? We pull down. We go to pull higher and we fail to take out this high, right? The next high we put in this area here, buy side liquidity again. And then you see we get this illiquid move to the downside, leaving behind this imbalance over here. and then another imbalance over here. And during this move down, we take out not just one area of sell side liquidity, but two, right? These areas where price is deemed as cheap. Now, what we usually anticipate is after price takes out multiple levels of sell side liquidity or buy side liquidity, we tend to see some kind of retracement, right? After taking out these areas, distributing off liquidity, we need to see some kind of retracement back into the range. And we see this happen again in a very illiquid manner. And what that causes is us to leave behind a BPR on our chart. If we punch this in here, right, and you can see where this happens on the illiquid move down, seeking buyers, right? We find buyers down here, and then we trade back into this illiquid move, leaving behind this BPR and this imbalance over here, right? And you can see how even till the last couple of days, that area, that proximal line has been important. But let's bring our eyes back to here and our attention back to here, right? We get that imbalance, right? A new bullish array has formed. We have induced this bearish array. So let me just get rid of this again and do it in chronological order. So we get these two imbalances, right? This imbalance is our most recent. We then induce the imbalance, right? Meaning that buyers have now overwhelmed these sellers in this area. Buyers are now potentially stepping in, right? So we induce that, and we now get this new imbalance, bullish imbalance, that gets put in place, right? We get this BPR, this bullish BPR, which also acts as an array. And then price taps into the upper end of that, the proximal line, and respects it, right? We then push up again. We leave behind a new array, a new bullish array, which is this imbalance over here. And then eventually we end up inducing this final array on our downside leg, right? This distal line over here gets induced. So now we've wiped out all the bearish intent that was present on our chart, right? Buyers are now fully in control. So if I mark this out with an I, meaning induced, right? Once we close above that, that has now told me that buyers are in full swing. Why? Because we're inducing bearish arrays and we're creating and respecting new bullish arrays. The order flow is now bullish, right? So we tap in and we respect the bullish array here. We create new bullish arrays, we tap in and we respect them here, right? And now this is where we have to start looking at the structure on our charts, right? So I remember when this was forming on our charts, people were looking at this area here, right? And seeing price come down and failing to move higher. And we're starting to think that now we could begin to roll over. But understand the structure on our charts, right? We put in this low over here. Sorry, this low here. We make this high. We put in this low then makes this high, right? Which takes out the previous high. This high then comes down to this low then puts in this high, right? So this is our last area, or this becomes our invalidation point, right? For the structure to shift, it's basics, right? It's, you know, higher high, higher low, higher high, higher low. And once the last higher low that made a higher high gets broken, we shift, right? So in order to see a shift in the market, we'd have to see this low get taken out. And we don't see that. We don't see that. We stay intact. We come below once, we pick up liquidity, we try to push higher, we fail, right? We come below once more, we try to push higher and we fail. We push down, we don't break below this low, we don't manage to get around this area of volume over here. We end up creating a new bullish array. So let's just get rid of those dots and keep it clean cut and precise, right? We end up creating a new bullish array, bang, and that ends up taking out that area that we spoke about, right? That last high over here, right? So we're continuing that bullish delivery, that bullish order flow is still intact. So you see how slowly and slowly we're piecing this together. We're seeing what's going on here and we're trading towards this area on our chart, which is deemed as expensive, right? This area above here, this buy side liquidity area. So we see price edges higher, we tap into the array and notice how all these times on these bullish arrays, how we respect at least the midpoint. We're tapping proximal lines and midpoints, right? Here we tap the proximal line. Here we tap the midpoint and respect it. Here we're respecting that midpoint, right? The delivery is being respected. Bullish order flow is being respected. These are things that you need to be paying attention to. You need to be very meticulous and zoom into your chart and pay attention to the finer details, right? So we tap into that imbalance, we push higher, we're taking out previous highs with intent, right? Notice how now we get this array over here, right? Now, the difference is this is the first, and this whole leg, in the whole leg over here, this is the first time that we get a bullish array being induced, right? This is the first time that we get a bullish imbalance that gets disrespected, which tells us now that sellers are starting to counteract the buyers. That the buyers, again, that were trying to buy this leg here at these expensive prices, they're not willing to bid the market higher anymore. And sellers are starting to step in and wipe out the intent that was present on the buy side, right? And due to that, we get this BPR, right? And again, notice where these BPRs are occurring, right? As we're taking out buy side liquidity, as we're running sell side liquidity, all these things, right? That pay very close attention to these things. So you see, we get an inefficient move into buy side liquidity. We draw back into that leg, right? And we create this BPR. Let's just put that in, right? So at this point, we wanted to see price come into the BPR and respect it. You see that we just trade above, right? You see that we get a slight body close above here. But then the next candle confirms that, cool, you know, this was just a slight inconvenience. We close above and then we dump below. That still tells me that we're, you know, experiencing bearish order flow now, right? So number one, we've induced the bullish array, this imbalance. We've now created a new bearish array, which is that imbalance right here, which then creates the BPR. And then the final step we need, right, the final confirmation of a strong rollover is to take out the last structural area on our chart, which is this low here, right? This is that low which made the most recent high there, right? So you see we make this high here, this high takes out these highs over here, right? This is our structural low. Once again, we start pushing lower with intent, right? Just imagine we hadn't tapped into that yet, right? We push down. Now on Euro, you see we wick this low and we fail to close below. But on DXY, we actually body closed below, which gave me the confidence to say that we had shifted in full swing, right? DXY had closed below, Euro had closed above, and using that cross reference, I was able to say, cool, we've fully shifted I'm using DXY to provide me with more information as to what can happen next. And at that point, I was confident that price had now shifted and we were now looking for bearish delivery. So once again, like I said, we had bearish arrays being created over here and we want to see those get respected. We have obviously this lower one over here. But if we pull up our premium and discount areas of that range, you can see that this one here falls in the discounted area on our chart. So this wouldn't have been our most ideal array. We'd rather see this premium one get tapped into, and that's what happens. We see price trade into the premium area on our chart, tap into this array, once again, respecting the midpoint. We're not body closing above the midpoint, right? That midpoint shows you where the average area, so to speak, or that mid area where volume is going to accumulate, right? And if we start closing above that, then it's highly likely that we're going to disrespect that area. Whereas if we close below that, it shows us that liquidity is being injected from this area and we can look to see follow through from that. And that's exactly what we see. Now, this brings us closer to the analysis we was doing leading up to this trade, right? So we see that price respects this imbalance here. We roll over, liquidity seeking move to the downside, and we tap into the proximal line of this imbalance. DXY actually taps into the BPR, right? So we did have a slight divergence there, but that's okay. So boom, we end up taking the previous area of sell side liquidity, breaking through that. Now, in this leg, right, usually we'd want to see some kind of array form around this area here. Like when we start to seek liquidity in an inefficient manner, we want to see arrays being left behind, but we don't get that, right? The only array that we get, and what I mean by that is that we want to see an imbalance. We want to see some kind of imbalance being formed to confirm that illiquid nature, that liquidity seeking nature of price. But we don't get that, but we still get this bearish OB present over here, which is an array nonetheless, right? So we get our bearish OB. Let's punch that in. Bang. And then if we put on our dealing range tool, go from there to there, you can see this is a nice premium array on our chart. Now, in all honesty, before we had traded into this region, I was looking for price to probably top out a bit lower. I wasn't expecting this OB to get traded into. And I ended up taking a slight loss, a very small loss the day before, right? Because again, we don't have any arrays to play here. It was a silly loss, but in terms of volume, you can see that this is that kind of area which brings us back into this core dealing area where volume is present again. And I wanted to see price push lower from here, but we didn't get that. And once we started body closing above this on the daily time frame, right? On this time frame, you see we close higher. Then I was starting to shift my perspective and my eyes and my focus to this bearish OB over here. And now you can see exactly how price responded from this and where my short position comes into play. So what we are looking for here, and this is, you know, some insight for you as what to look for going into next week and the following weeks, right? We're now looking to see price respect this area and start trading lower to complete this sell side curve that we've got on this daily time frame, right? Trading back into these sell side liquidity lows over here, this sell side liquidity pool, and completing that sell side curve. That's what we want to see ideally. So this becomes sell side liquidity, and that becomes our draw on liquidity that we want to see price roll over towards. So just to kind of paint a picture here before the trade, price was trading at this OB before my entry, or while I was looking for my entry, right? And the one reason why I was so confident to take this is because this is our final array in this leg, right? If we break this, then we're coming to our buy side liquidity area, and we're potentially starting to flip the narrative, right? So my invalidation point was extremely clear. I knew exactly what I wanted to see. And because of that, right, this daily OB and the volume behind that, I was confident that price, especially in the illiquid manner that price pushed higher. I've spoken about this before. The more illiquid or inefficient price pushes into an area of volume, the more likely we are to see a reaction from that region, right? At least back to here. Right, this is the last area of volume on our chart, so I won't be surprised if price at least trades to here, right? And then we want to see price fall lower, right? So we want to see price come back into the range, and that's what I was looking for. So I'm now going to shift over to our lower time frames. All right, so to paint some context on the hourly, right? You see that this is where our daily bearish OB was. I've just copy and pasted that onto the lower time frames, pulled this across. You see that price runs into that, right? Taking out the Asia high, we'll dive into this on our lower time frames in a minute. We take out the Asia high, right? We end up flipping over, we push lower. Price then starts to roll over and we take out this last area of volume here. This is what we call a volume band, right? This was the last area of volume which caused this push higher. Look how we trade through that and body close below, right? We body close below and then we tap into we flip it and tap back into it and respect it to push lower. So this is what I was looking for there, right? We flip that, and again, there's not much to work with. We don't have new arrays being created. We don't have any strong OBs, any imbalances. So this was a riskier trade. This was almost trying to catch the top, right? But again, due to the nature of this OB and the fact that it was the last array that we could trade from, I was confident to take this. But the main thing on our hourly was this flip, the fact that we traded through this main area of volume, right? This was the thickest area of volume, which is going to be the hardest to get through. We tap into it, we respect it, we tap through again, we body close and we fail to hold it. So on the hourly, that was more than enough to tell me, cool, that at least on our daily profile, right, for the day, I would like to see price push lower, right? So that was my thought process on the hourly. And to target areas, right, when I'm looking for where I want to target, there's no real areas to target here. You have, you know, your OB down here. This is, sorry, I've drawn that completely wrong. Oh no, yeah, there you go. So you have your OB there, which is where I took profit I took partials at this OB. But other than that, you don't have much to work with. This is your final target, right? Especially, hold on. Especially when we're expecting price to flip over, right? If we're injecting sell-side liquidity, we want to look for, or if we're injecting offers, right? Sellers stepping into the market, we want to look for where buyers are most likely to be, and that's going to be at this sell-side liquidity, below this sell-side liquidity. So where I actually had my target was at the average of these wicks. So on my MetaTrader, right, I would have actually taken full profit if I'd stuck with this, but it was in the last 15 minutes of the day, so that isn't what happened. But this was my overall target that I wanted to see price take out, and on the 4 hour it looks cleaner. You can see it a bit better, what we're looking for there, right? This is the low that made this high. We want to see price run into this sell side liquidity and hit TP there. So that's why my TP was there. And yeah, so that was the only real context that I had on the hourly. There's not much, but there's something, right? Now let's drop down into the M15 and wrap it all up. So you see here that we get our Asia high put in place. And then we get our Asia low put in place. Right, price then pushes into the upper region of our Asia range, taps into the bearish OB, right, in a very illiquid manner, and then we start to see price roll over. We get this BPR form. Again, notice where that BPR forms, right, as we're taking out buy side liquidity. BPR, no, we don't want to do that. BPR, bearish imbalance, right? And at this point, this was trying to call tops and bottoms too much, right? I didn't want to short from here. I'd rather see this order flow get respected first, and then once we push away from that, then I would be happy to get involved. So at this point, I didn't want to take this, but we're creating new bearish arrays. We take out the M15 shift point, right? This is the low that created this high up here. So we take that out. There, we body close below, and then we attempt to go for Asia low, and we fail, right? So we push lower, we come back, we attempt to tap this. You know, it's a couple pips away. We can say we respected that. DXY did tap into the corresponding area, right? This imbalance, respected it, and we roll over and push away. Now this is where the entry comes in, right? You see here that on Euro, we didn't close below this previous low here, right? So at this point, what we've got is price went like this, we market shift, we pull up over here, and we're failing to break this low, right? This is what we're doing here. We're failing to break that low. However, on DXY, we actually closed below this low just slightly. So if I go over to DXY and we look at this, you see right here. So this is that imbalance that got respected, right? Very small, but it's there, right? This is that high, and you see how we close above, right? We close above. So at that point, I was saying, cool, we've now, you know, we've created a market shift, we've created a leg down, we've pulled back, and we've now broken that low over there. So now what I want to do is look for a retracement and go short. And this is the only array that we really have to play, right? This OB, we have this bearish OB here. And this is where I took my entry. So I went short from here with my stop loss just above this area here. I think it must have been somewhere there. And then we was targeting this sell side liquidity down here. Come on. Right, so then I was in at that point. This was very slow PA, right? up until this point here, around 11:45, 12, this was all very slow. Understand that I risked half of my normal risk, right? I risked half, and I was managing this very aggressively. If this was starting to close above this bullish OB, and it didn't respect it as it did, then I would have gotten out, right? Because again, I don't want to be trying to risk or be aggressive, or too aggressive as I'm before we have the required confirmations, right? This was more or less just the daily profile play where we're reacting from a higher time frame array, and I'm trying to see my standard sell day play out, and we had it forming. So I wanted to do that, but we didn't have much 4-hour or 1-hour confluence or reasoning, context, backbone, structure to give us this short, right? So it was more just a cool higher time frame array ETF play, right? Which isn't really what we want to do. So I was being a bit cautious here, but yeah, so once price started pushing lower, again, around this area here, I was looking to take profit, but I saw that we had divergence with DXY. So I held off of that. I wanted to see DXY take out the corresponding area, which led to me taking partials around that OB that I showed you on the hourly, right? That was my first partial. So it was around here. Then price pushed lower. I wanted to see that kind of final sprint play into this sell side liquidity. We don't get that. And then as price started to kind of pull over here, right, you'll see it on the screenshot anyway, I ended up banking the remainder of my position over here. So that was that, guys. I hope you enjoyed the video. I hope you found some value in that, and I will see you in the next one. That was a good video.